And joining me for a look at what's playing out on the market scene at midday is Odwa Magwentshu from Momentum Securities. Odwa, thanks so much for your time this afternoon. So a rally playing out. I don't know if I should call it a relief rally or a cautious rally. And this, of course, on the back of President Trump hitting pause on some tariffs. As I mentioned, it seems like he'll be pulling back on auto tariffs as well. And those stocks leading the gains in Europe there. So what have you made of trade this afternoon?
Thank you for having me. So, as you said, he did relieve the 25% on the tariffs on auto vehicles, and we are seeing a rally on that front. We are seeing some, at least it's going to give them a pause, restructure their routes, their suppliers, in whatever is expected in the interim. Perhaps some strategies have been to bulk order if you're looking to move before the tariffs hit. So there is that strategy that could be at play, and I believe that just now this just gives them that opportunity, because if the tariffs do stay, it's approximately about $5,000 to $10,000 extra that the U.S. consumer would have to pay for these European cars, and I think that's what the market's looking at.
And what have you made of, trade recently? I mean, the yo-yoing we've been seeing between positive and negative. One day we hear of pauses. The next day, tensions between the U.S. and China are heating up. It does sometimes seems like these moves are over-exaggerated.
I wouldn't say over-exaggerated. It is when you look in hindsight. Of course, if everyone got those high tariffs, it was a dire moment. I think what's more important or more at play right now is the surprise of Donald Trump, where he can say anything at any time.
Yeah.
Even with these auto trades, they haven't been cast in stone. He said he might think about it. Nothing is actually on the cards as we speak. So at this point right now, everyone is trying to front run and protect their assets or their investments before Trump says something erratic or obscure in that sense.
And when you talk about front loading, I think of the Chinese export numbers that have recently come out, and I think they were up over 12%. And when you go deeper into that report, it just seems like a lot of companies are just trying to move products before, tariffs come into play. Is that what we're seeing just generally across the world with firms that have manufacturing hubs outside of the U.S.?
In some cases, yes, most definitely we are seeing it. However, last week as well, we heard that Amazon canceled a shipment from China ahead of the tariffs. So there are some businesses who mainly desperately rely on Chinese manufacturing, which would then do a bulk purchase of these goods. For example, you look at the retail sector as well. You would expect on that front, you would have some bulk investments or bulk purchases before anything goes ahead. And I think ultimately that could have been the underlying reason when it comes to the 90-day pause on most tariffs. Maybe the opportunities now come that yes, there is still that 145% tariff on China. However, because everyone else is at a flat 10%, companies can then reroute and try and get Chinese goods from Asia or Africa, for example.
I think one thing's certain here that, markets are going to remain volatile for quite some time. Let's take a look at what's playing out on the company news front. LVMH really disappointing markets with those sales declining by 3% in the first quarter, missing analysts' expectations, of course. Asia, besides Japan, still proving to be a pain point for the group.
Yes, as you said, the overall was down 3% rather. However, if you look at everything else on the alcoholic side of things, you're seeing that there's also a slight decline on that front, losing interest from the United States consumer with the brands. And then, as you rightfully said, about 11% decline on the Asian front. And I mean, Asia has been not coming to the table as you may in terms of buying luxury brands. They're mostly buying gold things right now, gold medallions, gold coins, and just stockpiling on gold because in long term they are looking for other ways to diversify their investments. With LVMH, we are seeing right now that they've also been overtaken by Hermes with market cap after
Okay.
these latest results.
And it's interesting to see what's been playing out in China, especially from a consumption front, because we have seen, consumption really lagging on that front. And it's said that Chinese consumers have money, they're just not spending it. And that's what we've been seeing playing out, especially in the luxury sector. Let's move over to what's been playing out here at home, particularly the Rand, right? We've seen the Rand really recovering over the past few days. It's sitting under the 19 Rand mark to the dollar. Yesterday, I think it was leading emerging market currencies as well. Are we seeing some calm return as sentiment improves on the political front? I mean, there's also been some reports following the ANC-DA talks that even that could be scrapped.
Yes, there are some reports right now stating that the VAT increase could be scrapped as the ANC went on a week-long escapade where they were meeting with different parties, trying to determine where a deal can be struck. Not much detail has been given on the front. However, word in the street right now is that they are not looking to go ahead with the VAT because of no one buying in. And that then has calmed at least the political risk that we have as a country, and also that could see then the GNU coming back stronger again from this. And basically, to be frank, it's also showing the workings of a coalition
Yeah.
or a government of national unity that no one party has the way anymore to just do anything erratic or things that people aren't looking for. So at least we're seeing some positivity on that front. On our side as well, if besides the rand strengthening on that political side, we are seeing the dollar still remaining below that 100 points mark on that front. Donald Trump, unfortunately, or the US, unfortunately, has been scoring a lot of own goals in the recent weeks.
It's really interesting to see how some of the dollar of the rand strength is more of a weaker dollar story than it is shifts in the local front. So let's just hit pause on the conversation before we get to your stock pick. Let's reflect on some counters that have found favor with your industry peers.
So Bytes was unbundled from the Altron Group. It has no operations in South Africa. They're basically a UK software services provider. They're an agent for Microsoft. During difficult times such as these, the advantage of someone like Bytes is they charge the same way Microsoft charges you. You have a subscription every month they collect, negative working capital, no one ever cancels. I think a business such as that, in an industry such as that, is nice and defensive in the world that we are in today. So yeah, my pick will be Byte.
This is a global company, so you've got your geographic dispersion already in place. It's a consumer cyclical, but it's not that, it's got a beta of about 0.5 or 0.6. So in a certain sense, it's defensive. It's got complex supply lines, which is what I'm against. But on the other hand, they already source a lot of their ingredients locally. So they've got both, if one takes a look at what companies to invest in, go for things which are not really affected that much by where you get your stuff from. I mean, their biggest problem with chips is where they get their potatoes from, rather than whether there's an embargo on tech shares in China. So it's nice and offensive. It's been spared the absolute markdowns we've seen in the US markets, and and I think despite, as I've said, being a luxury item, it is far more defensive than most of your other consumers.
So Rick is going with McDonald's and Roy picking Bytes. What have you made of those counters? Are these counters you're liking?
I do actually love these two counters. You look at Bytes, as you said, it's a IT software. Subscription will come automatically, and it's something you once you have, you're not looking to get rid of, and that is a good hedge with current volatility in the market. And also McDonald's, a synthetic REIT, it's quite a great company to have, and you know, when you're not looking to cook, you are looking at McDonald's, and they've got nice PE ratios as well.
Hey, but Odwa, McDonald's doesn't make real meat. But anyway, let's move on. So you like those counters, but you're not picking them as your stock pick. Where are you seeing opportunity today?
Right now, another defense. I'm looking at education with Stadio. They have very good numbers, and they looking to, you know, the economies of scale are looking very strong for the business, especially because there's online learning, and that means that there's no limit in terms of the amount of students you can enroll. And the business has been going well. If you look at the balance sheet, minimum debt that they have, and they got quite nice cash reserves. So that's why I'm going with them today.
All right, Stadio for you, Odwa, and thank you so much for your time and just sharing your insights on trade at midday. That was Odwa Magwentshu from Momentum Securities.